trading around 6.95 at this stage, but it really looks range bound in this range between 6.90 and 7 rand against the dollar.
Yeah, I think we're going to be stuck in this range for some time, Stephen. Well, certainly until tomorrow when we get the Fed announcement. But there's really quite a slew of data coming out that holds a lot of event risk. Not only do we have the Fed announcement, we also got the Bank of England, the European Central Bank, and then, of course, we've got unemployment data at the end of the week. So starting with the Fed announcement tomorrow, pretty much an announcement of $500 billion, all but priced into all the markets at this point in time. So I guess it will depend on the tone of the Fed, whether we can see some further dollar weakness or whether in fact they announce a smaller or a bigger program. So the market a little bit unsure at this point, and therefore we are range bound at the moment.
Of course, we have had manufacturing data out yesterday and today. We just had the Eurozone PMI out a short while ago. Looks a little bit better than expected. Yesterday, the US better than expected, China too. How do you think that the US ISM numbers might affect that quantitative easing from the Fed?
Yeah, that's what's causing a lot of confusion in the market at the moment, Stephen. Data has been better than expected. But of course, one of the issues that Europe is faced with, although they've got very good data come out this morning, across the board from Italy to France to Germany and the Eurozone as a whole, is the fact that the peripheral European countries' bond yields are heading out again, and people are really concerned about countries like Greece perhaps defaulting over the next 2 or 3 years. So that's holding back any sort of confidence measures that can be built on this data. And of course, the US has got a similar problem. The economy looks like it's chugging along, but it's not creating jobs. There's still the threat of asset price deflation, and of course they also mired in huge amounts of debt. So those are the sort of dynamics playing themselves out. And then of course on the sideline we've also got what China is going to do, which is creating all sorts of uncertainty in the market, and we're seeing a choppy market at this moment, albeit in a smaller range.
David, any implications of the US midterm elections for the markets and for the currency markets, because it really looks like the Republicans are set to take the House?
Yeah, I think that's well priced in. The Republicans are going to take the House, which effectively for anybody that that can relate it to our kind of system, it will mean a bit of a hung parliament. You've got a Democrat in charge of the country, but really the Republicans making a decision as far as Parliament or Senate is concerned, or Congress. And they've got real problems as far as partisan politics is concerned. So it's not going to be positive for the dollar in the medium term, because a lot of people expect that a lot of the policies that Obama's trying to push through are in fact going to get stuck in debate and in this really in the system that doesn't allow for that when the Republicans rule the House.
Of course, we already have a feeling for what's going to come out of the US Fed tomorrow. How about the Bank of England, though, because they don't have as much room to move with inflation in that country. Of course, we have the Bank of Japan also meeting on Thursday and Friday.
Yeah, Bank of England don't really have an inflation problem at the moment, except, of course, they've got similar issues as far as the housing market is concerned, and as far as unemployment is concerned, they've got similar issues to the US. So a bit of a tricky road for the UK. They've also got, they've also built up huge amounts of debt over the last 18 months or so, although they are showing a bit of growth, closer to the Eurozone. So less obvious for the UK. As for the US, I think Mr. Bernanke is very, very concerned about deflation and unemployment. I think he wouldn't want to surprise the markets now and announce a smaller package than what is expected. But in the UK, a little bit less of an obvious picture building.
Well, while we have monetary easing potentially in the United States and across Europe, where we had monetary tightening this morning in Asia, we had India and the Royal Bank of Australia both raising interest rates. It looks like the Australian decision took the market a bit by surprise.
Well, the Australians, the Chinese are mopping up their commodities at a huge rate, creating a bit of pressure on the upward pressure on the Australian economy. They're less concerned, of course, about the level of the Australian dollar, less concerned than, for example, our own Reserve Bank. So they were quite happy to raise rates because the economy is doing very, very nicely. Of course, that pushed the Australian dollar through 1 to the dollar or thereabouts this morning. It is interesting, something like the Australian rate hike, because if we drop rates at the next MPC, then the short-term rates between South Africa and Australia are in fact the narrowest that they've ever been. And I think that will have medium to longer term implications for the rand against currencies like Australia, where we have an interest rate that is very, very close to parity against those markets.
Is the expectation very much that we will still be cutting, because we had those PMI numbers out yesterday and still below 50, and really jobs employment still a big problem in the manufacturing sector?
Stephen, for me, there's absolutely no reason why our own Reserve Bank can't cut rates. Perhaps not much by as much as 50 basis points. You know, we're already at historic lows, and perhaps it is time for the Reserve Bank to make smaller increments, perhaps move that to 25 basis points. But at the moment, I really don't see a reason why we can't cut rates at least by 25 basis points at this meeting.
We had car sales figures out just a short while ago, 22% growth year on year, up 5% on the month, so still looking pretty positive at this stage of the year.
Yeah, but you know, things like money supply and credit demand really lagging, although, you know, we have seen slight increases in recent data, but they're still lagging. Our economy is not really doing that well, and of course the biggest challenge is unemployment, and everybody knows that. So, I don't think a figure like the car sales is going to create any excitement or inflationary pressure at this point in time. Again, no real reason why we can't cut rates by at least 25 basis points.
Well, David, just going forward to tomorrow to that Fed decision, what's the impact likely to be on the dollar if they announce a stimulus of more than $500 billion?
Yeah, I think 500 billion is priced in for the moment, moving towards $1 trillion. If they announce something bigger than that, well, of course, that's just flooding the system and flooding the system with liquidity. That has serious implications for the dollar. If it's a much bigger package, somewhere of $1.5 to $2 trillion in totality, then I seriously think the dollar will move up towards 145, even 148 against the euro, and a similar implication for the dollar against the rand.